Hey guys, this is Prashant Rao, and today we'll be looking at a couple of charts to see how to find opportunities. From the feedback I've gotten so far, it appears like more people are interested in stocks. So I thought I would just look at a few tickers to see if we can find anything. And also, as part of that, I was hoping to explain a few common patterns that help you identify these high probability trades. So let's get started. So in this chart, we're looking at Quest Diagnostics, and this is on a daily level. So if you see, uh, if you look at the recent times, so we've recently had a double bottom here, and this here is the neckline. And you can see that now we've broken out of the neckline. So in this case, what I would imagine is, since we've broken the neckline, while we might see some pullback, the path of least resistance is generally higher. So this is an example of a double bottom, and you can see that in quite a few situations. So let's maybe look at another chart where we see something like this. So let's take a look at Salesforce. You can see it's an Adam and Eve bottom, it's a double bottom. Here's a neckline, cross the neckline, and with that, generally what you're looking at is prices going higher. So again, prices don't go up and down on a straight line. So it's likely that you'll see some consolidation and then the market will turn higher. Uh, Also keep in mind that the overall um, market environment has a great effect on how this evolves. So if you see S&P get knocked down by another 200 points or 300 points, then regardless of what this chart pattern says, it's probably going to go down along with the market. So keep in mind the market conditions that you're currently trading in. But as of now, it appears that the path of least resistance is higher. Let's look at a couple more. Let's look at a double top. Uh, this has a double top and a double bottom, so this might be a good chart where we can see a couple more patterns. So this is a chart of Restoration Hardware, and here you can see the double top being prominent. Again, the tops don't have to align. A lot of people think that it has to be picture perfect. That's not really the case. So here in this chart, you can see that the neckline is around here. So when it breaks below this level, that's the time you want to get into the market. And if you got in, you went all the way down until here. And now that we're at this level, you can see that there's a double bottom formation. Here's the neckline. We've crossed the neckline. We've seen the prices go higher. So again, in this case, it appears that the path of least resistance is going to be higher. And again, that also depends on the overall market conditions. So never do your analysis in a vacuum. So you always got to keep the big picture in mind. So let's see. Another stock that a lot of people seem to be interested in is Boeing. So let's take a look at what's happening here. So, I mean, as you can see, we've fallen off a cliff, and this is a weekly chart. So Boeing's had a what I would call as a complex head and shoulders. So you have a head, and then you have multiple shoulders forming here. And then it fell off a cliff once it crossed the neckline. Now, a couple of things here. Um, so if you look at the moving averages, it's something I don't like to do. Typically, I do not have any kind of technical indicators like MACD or RSI or Williams and whatnot. I think they're just a total distraction and a waste of time. Some people have success with it. In my 15 years of trading, what I can say is they all work until they don't. So the ultimate thing that you want to focus on is price. And remember that price is the one that is moving those market indicators that you're looking at. Moving averages in general are a lagging indicator, so not a great thing to look at typically. But when you have like a massive sell-off like we did some time ago, it really helps to sometimes look at those moving averages. So let's look at the 50-day and the 200-day moving averages. So why 50-day and 200-day moving averages? Typically, um, 50 days is what you have in a quarter, and companies report every quarter, and a quarter is a good time to kind of analyze where we are in the broader context. So the 200-day, as you might have guessed, is approximately the number of trading days you have in a year. So it helps to look at a moving average and understand what the longer term trend is like. So we'll come back to Boeing, but let's look at perhaps this is even more appropriate. So let's look at the Nasdaq. And if you look at a weekly chart, so you'll see that the Nasdaq hit very close to the 200-week moving average back in 2018, and this is the time when we had a bear market. We weren't sure where we were headed, but then things happened. We had this key reversal, and then from then on, we made it all the way up until here, and now we have another massive sell-off. And you can see that during the sell-off, it bottomed right here. I mean, it's too early to say if it's the bottom, but at least for now, it's bottomed out right here, which is the 200-day moving average. So 200-week moving average. So the 200-week moving average is a very key level to watch out for. And if your broader index doesn't hold below the 200, above the 200-day or 200-week moving average, then it's very likely that there's going to be a big bear market. So watch out for that. Now let's get back to the Boeing stock and look at the weekly chart of, or let's look at a monthly chart of the Boeing stock. You can see here that Boeing has touched its 200-month moving average. And 200-month moving average is usually what you see at the very, very, very bottom of a deep bear market like the 2008 or one of those kinds of bear markets. Boeing has already hit that level. So in order for the stock to penetrate below this level, it's very likely that we'll see some kind of consolidation before it starts to move all the way down. Sorry about this. It's the drawing, it's not perfect. Let me try again. So likely path, if it heads downward, would be something more like this. So it's too early to tell, but given the massive resistance support level here, which is the 200-month moving average, it's less likely that it's going to just fall off a cliff right here. And now let's go back to our daily chart. So in this chart, we're looking at Boeing on a daily level, and you can see it's forming this pattern where it's consolidating and it's trying to find the right level. Typically, a pattern like this is a continuation pattern. That means that if you're headed downward, you're going to head downward from here, and that's usually what happens. However, in this case, it's a little hard to say because we've seen literally the 200 month uh, being hit, moving average being hit. So I would imagine that we might see a move up here. Again, it's a speculation at this point. We don't know how it's going to turn out. But on the other hand, if in the next few days stock comes back here and then forms a bottom and then crosses this neckline, that would be a good time to actually get in. So in this case, not something that I would bet on right now. If you're very interested, you can try a straddle to see if it goes one way or another, uh, but not something that I would touch at this point. So we've looked at double tops, double bottoms. Let's look at another example of a double top and where it's not so obvious that it's a double top. Let's look at the S&P futures. Sorry about these lines, these trend lines here. And if you notice, there's a double top right here. It's not exactly a picture perfect double top, but you get what I'm saying. So you have a top, you have another top, and then it crossed the neckline. So this is the level where you want to go short and wait for it and find and get off whenever you think it's appropriate. Generally, there are ways by which you can tell how far it's going up or down based on uh, how the double top is formed or the double bottom. In this case, it's not so obvious, um, but clearly in some other cases, you can pretty much tell where it's headed down to the price. So to look at that, let's check out our favorite stock, Tesla. Oops, sorry. And let's go back here. And here you can see uh, back in 2019, before this rocketed higher, um, there was a complex double top being formed here. Right? So it was a quadruple top. And then here's the approximate neckline. And if you look at, if you wanted to estimate how far down Tesla might go, you take the top, which is 380, and 300, which is $80, and then at the very least, you're looking at 220, which is approximately here. Right, so that's how far it's likely to go down. If your pattern formation is much more clearer. Again, this is all, I mean, it could go any way, any which ways, but again, we're talking about high probability. So keep in mind that there's a huge difference between high probability and certainty. Nothing is certain in the market, so it could have very well just rocketed from right here. But that can happen too. You got to be careful. And that's where risk management comes in. I won't cover it in this video, but we'll do that hopefully some other time. So this was an opportunity for you to go short, and you could have made money all the way. If you use this as a neckline, you'd be even closer. To this bottom here, and the measurements would just work out perfect. So it's an example of quadruple top. Um, let's see. Well, let's look at what's happening right now. Again, this is such a volatile stock that I mean, even the best of professionals have really difficult time figuring out what's going on. But if you see here, it formed this double bottom, across the neckline, and it's going higher. How far it goes is yet to be seen, but if you were in here, you could have at least made a profit from here, which is 560 up until at least 700. It's a decent move. Um, so that's how I like to analyze. I look at price. I do not look at any kind of moving averages, volume, RSI, MACD. The more things you have on your chart, the more distracting it's going to be, and it just makes it a lot harder for you to make up your mind, because one indicator might tell you something, the other one might tell you the opposite. Um, so, in my experience, that usually never helps you much. In fact, the best thing to do is to look at the live chart and look at the price and see what's happening in a broader context, then narrow it down, look at what's happening at a weekly level, then narrow down, look at what's happening on a daily level. And if they all seem to line up with the story and the thesis, that's when you place the trade. So that means you won't get a whole lot of opportunities, but whichever ones you do, there's a high probability that you're likely to make money off of it. So that's all for now, and please post your comments in the comment section if you would like me to cover any specific topics or look at any specific charts. Let me know. We'll try to do that. Or if you're interested in looking at um, you know forex or futures or something else, let me know. If you like the video, subscribe to the channel, like the video, and that helps me get a gauge of how many people are interested. I do get some basic statistics like how many views, etc. But it would be nice if you guys actually put your feedback in the comment section. So, anyways, that's all for now. Um, Thanks for watching. Hope you found this useful, and I'll see you next time.